Good day. It is Monday evening, April 13th, 2020. Thank you for joining us here on YouTube. Today we're going to talk about this. You've heard this, I'm sure, many times. Bull market, bear market, who cares? Why waste energy arguing over labels? I just trade what's on my screen. We've all heard it, and at first blush it may sound logical, it may even sound wise, but make no mistake about this. Understanding context can make, and usually does make, the difference, literally, between abject failure and spectacular success. Today we'll examine overwhelming evidence of this as we move forward. Primary bull markets are the period of time where the 13-month moving average of the monthly NYSE composite average is advancing. Here's 25 years of market history. You see this period when this is the 13-month moving average, this blue solid line. When that is advancing, that's a bull market. When it's declining, that's a bear market. Advancing, bull market. Declining, bear market. Advancing, so on. We are now absolutely, without question, in a primary bear market. And the definition of that is that the 13-month moving average of the New York Stock Exchange Composite is declining. We will be in this bear market until that reverses. Whether that's going to be a few more months or as much as 2 or 3 years from now remains to be seen. But at this particular time in history, we are in a primary bear market. Now, as a trader, it is massively important for us to know what is likely to follow a very high McClellan Oscillator reading. Most of the people listening to this know what the McClellan Oscillator is. When we get a very high reading, for example, in the area of plus 100 to plus 150, we need to know what's likely to follow that. Should we, when we get that, as we did on Thursday when it closed at 119.52, the McClellan Oscillator, should we go to 100% leveraged long and sit tight? Or should we get very cautious and move to cash and perhaps look to be shorting in the days ahead? The answer to that question is one that would surprise 99% of the crowd out there. The answer to that question is it depends on the context. It depends on whether we are in a primary bull market or a primary bear market. That's what we're going to show you today. Now, we're just talking about the McClellan Oscillator today, but what is true of the McClellan, and that is how we interpret it depends on what context we're in, is also true of all of the indicators out there, whether we're talking about RSIs or put-call ratios or equity-only put-call ratios or moving averages of TRIN or TRIN-Q. Any indicator. There are hundreds of indicators that traders use, but here is a critically important fact for you to know. How you interpret that indicator, what is likely to follow a given reading on that indicator, depends on the context, the market environment, whether we're in a primary bull or a primary bear market. Today, let's just show you some examples. Well, let me see if I've got that 100-year history. Let's look at that first. If I go on down here, I've got there it is. Here is the 100-year history of the McClellan Oscillator from clear starting clear back here in 1925. It's actually 95 years of McClellan Oscillator readings from 1925 to 2020, 95 years. This line is drawn across 118, a plus 118, and you see how few times the McClellan Oscillator in 95 years ever got above plus 118 on any given day. There's perhaps 20 incidents of that in 100 years, or 95 years to be more precise. We had one of those rare occurrences last Thursday when it closed at 119.62, one of only 20 times in the last 100 years, basically, that it's closed over 115. What does that mean? What does that mean lies ahead? Well, I'll show you by example what that means. Let's take a look at those kind of high readings in bull markets. 1933, here it is hitting closing at about 150, to be precise, 148.64 on the 20th of April 1933. Here's another time when we closed in 1975, 10th of January 1975, at 133.72. Here's in 1982, in August 26th of 1982. Here's where we closed at 124.44. Here's a time in 2009 where in March 18, 2009, it closed at 105.41, and here's a time in 2019, just a little over a year ago, in January 9th, 2019, it closed at 117.76. What followed those? These were all in bull market environments, and here's what followed. 1933, here was that high reading right here at 72.5 on the Dow. The Dow went to 108 in just the following weeks. High reading, boom, up we go. That's a 50% rise in the market in the next few weeks. 50%, that's like a move on the Standard & Poor's 500 here of something like 1,200 points, or more like 12 to 15,000 points in the Dow Jones Industrial Average, just in a matter of weeks, following, not before, but following that very high reading on the McClellan Oscillator. 1963, here was that high reading of over 120 in November of 1963, and boom, here's what followed. Same kind of deal. Here it is in 1975. We got this very high reading of about 133, and boom, here's what followed. A massive advance in the Dow Jones Industrial Average. 1982. Here was that extreme high reading of over 120 in August of 1982, and boom, here's what followed over the weeks that followed that high reading. Here's 2009. You all remember this one well. Just last year, by early March of 2019, that McClellan Oscillator got up to 105 at this point, and look what followed. The S&P went from 780 or 790 to 930 just in the next few weeks. Oh, I'm sorry, that wasn't 2019, that was 2009, coming at the beginning of the great 2009 to 2020 bull market. Here's 2019, just a year ago, and in early January the McClellan Oscillator hit a level of just about where it was last Thursday of around 118. And here's what followed. Look at this. The Standard & Poor's 500 went from 25.90, 25.95, I guess it was, to 29.50 just over the following weeks. After that close at 118 plus 118 on the McClellan Oscillator. Okay, so we might conclude, okay, now we know what to do. The McClellan Oscillator hits a big number, closes at a big number, markets go up for the next several weeks or even months. But wait, that was in a bull market. Let's take a look at what happens in a bear market. I'll skip the specific days. This was in 1929, 62, 74, 74 again, 2009, and then 2020. Now let's look what followed those extreme readings. 1929, it got up to 115. That was right here. Here's what followed. The market went flat to down over the following weeks. Here's 1962. We got an extremely high reading, over 140 on the McClellan Oscillator, and over the following weeks and months, the market went down. It went flat, up a little higher, and then much lower. Late 1974, it hit this kind of reading in early January, and here's what followed that high reading of 125. That's what happens in a bear market. You get a high McClellan Oscillator in a bear market, and this is what follows. Here's later in 1974, same thing again, a high reading of nearly 150, and boom, down it goes afterwards. And then in 2008, right at the end of 2008, we had this high reading, actually first couple of days of 2009, plus 120, and then down goes the market. Okay, that's what happens in a bear market. So you get a high reading, and somebody says to you, what do you expect the market to do when you get a high reading like this? You should say, well, are you talking about in a bull market or a bear market? If you're talking about a bull market, you should actually leverage up to 100%, go 100% long leveraged, and just do nothing but wait and ride the bull. In a bear market, very different. Here's what happens after a reading like that in a bear market. We're in a bear market, folks. That's important to know. So that's really all we wanted to talk about today. Just the fact that in a bear market, you really need to understand how to read your indicators, and it doesn't matter what indicator we're talking about. They act differently in bear markets than they do in bull markets. So thank you for coming by and watching this video and listening today. We want to invite you to go to 7sentinels.com and look at these articles that are down at the bottom of the page. These are all free for anybody to just click on and read. Articles like Moment of Truth, or the One Sacrosanct Trading Rule, or Critical Turn at Hand. That was on Christmas Day 2018. Or When Worlds Collide, Rainmaker. These were articles that were predicting that we would be into this bear market in 2020, and it was laying out in detail why that was so. If you also want to click on this link that says limited time trial, it will take you to a sign-up sheet that allows you to have a 7-day trial of 7 Sentinels for just $7. We publish all day long during every market day, then every night, then every weekend with our weekend articles that this particular YouTube is taking off from yesterday's weekly article. All of our trades, all of our rules, all of our Seven Sentinels indicators, trend indicators, it's all there for you. And it just costs you $7 to check us out. We hope you will. Thank you very much. And we want to wish you good trading.